Hello and welcome here today to NAB New York. It's great to see everybody. I wanted to give you some research on the state of the MediaTech industry and the main drivers of the change within this sector. I've tried to condense this down to as much insight as possible into a short presentation. Although certainly if you have some questions, we'll save that to the end. So first of all, who is IABM? So IABM is the trade association for the vendors within the industry. We have about 450 members. A lot of the exhibitors on the trade show floor here today are members. So we do a lot of research and a lot of networking between members, as well as we help both members and end users partner and work together through our reports. One of the sections I really focus on is our technologies and trends roadmap. And what we do with the technology and trends roadmap is I've taken 40 of the main technologies and trends within our working group, and we've grouped them into 14 different categories, and we update this once or twice a year. And just to give you an idea how we segment it, we use what we call the broadcast and media content chain. And what the broadcast and media content chain is, most of the industry is using this, and it's create, produce, manage, monetize, right down to consumer. So our reports are broken up into those areas and those sections. So before I delve into the data, let me briefly explain a few things. The presentation's based on exclusive research by IABM that was done last month just before IBC. So if you want to take a deep dive, you can certainly go on the QR code. I'll bring up the QR code at the end of the presentation as well. You can also go on our website and look on our Knowledge Hub to get at this. So if we look at it from a macro perspective, when it comes to highlighting in the last few months, it's certainly been inflation. In fact, the outbreak conflict has really worsened the pandemic-induced scarcity, leading to inflation, which has in turn led into the central banks, of course, raising interest rates worldwide, and we all know about that. So you'll be able to see some of this detail in the full report I mentioned on the previous slide. However, I'm going to get into a few details in this presentation. It's also useful to mention inflation's not only affecting material things, it's also affecting labor. So scarcity of labor is in fact driving salary inflation to its new phenomena relevant to our industry. And I have to say here, it's like really gone off the map, and trying to get labor and people in our business is a bit of a challenge on all sides. So we've seen a lot of this, and this trend has been going on, since NAB really, and beyond that. Another source of macro pressure is the supply chain disruption. We all see supply chain disruption on various things, from buying things in our home to whatever, but certainly it's a record high this year. And it seems to have improved a little bit in 2022. Our industry really has unique parts though, so more often than not, more pain is actually felt within our industry. So supply chain disruption is leading most of the MediaTech businesses to stockpile or redesign their products to mitigate the pressure driving from the scarcity of components. A lot of businesses have stockpiled to face the situation, and we can see on the slide here what Harmonic's done. Another effect of disruption has been, again, inflation. And we can see these quotes from EVS as well as Vindium, which is renamed from the Vitech group. They were forced to pass on increasing costs to their customers. Note, both businesses mention increasing labor costs as a source of pressure. And it's not just about inflation driving the trends we're seeing. The lifting of pandemic-induced restrictions has led to an inevitable shift of consumer behavior back to physical business models. The cooling down of explosive growth in digital that we saw in 2020. We can see this from the growth trajectory of Twitch between 2020 and 2022. Digital consumption has slowed up a little bit, but it's important to note that it remains very high. This is one of the effects of inflation and changing consumer behavior, which I think is relevant to this industry. The retreat of digital business models that have thrived during the pandemic, including cryptocurrencies and streaming, for example. Bitcoin has halved in Q2 2022, with several crypto business filing for bankruptcy. The OTT stock index we follow has also halved in comparison to 2021, which led to Netflix laying off 450 employees in Q1 of this year. This year, people have started to talk about streaming maturity. No doubt, part of the reason for Netflix adding a new ad-supported membership that they're launching in 12 countries next month. So does this mean we're going back to media consumption of pre-pandemic? Well, we don't think so. Consumers have become more accustomed to using digital tools. That we shouldn't forget about the demographic trends that are driving the convergence that previously separated the M&E segments. Gaming is becoming the epicenter of the convergence, and we've seen gaming within our industry sort of take some of the technology from our industry into gaming, and then all of a sudden they develop higher end gaming industries, and of course then our industry started picking up using the gaming technology. So it's really clear how gaming is really part of the media business now. So according to our research, Convergent aims to augment and differentiate revenue sources for media business, as well as to improve engagement with new generations consuming media differently. So now let's reflect on the streaming maturity just a little bit. The growth experienced by streaming between 2020 and 2021 was certainly exceptional, and driven by, of course, the pandemic. So we knew this couldn't go on forever. This year, the growth arguably has been inflated as well, with consumers reducing their discretionary spend. This has led to the major streaming business, such as Disney as well as Netflix, launching these ad-supported offerings I just mentioned to cash-sensitive consumers. So when we look at this, it's kind of how we used to have it with the reaction of people cord cutting and starting to buy skinny bundles. It's really moved into that direction just a little bit further. So sentiment in the MediaTech business is significantly up despite some of the macro headwinds we're seeing. Favorable trends such as the production restarts have contributed to this improvement. However, we've received a few comments from our research on the macro environment having the potential to cloud this outlook just a little bit, particularly when it comes to the inflationary and supply chain disruption and trends. When looking at the media tech businesses, we can see investment outlook, though, has improved post-pandemic, following more significant improvement in their revenue outlook. Both financial performance and investment patterns show, however, changing the picture, and you can have a look at this briefly, how it's growing. So when it comes to revenues, though, we can see digital is growing significantly. However, it's still producing significant loss, and linear is really the cash cow. Revenues are growing slowly. However, a little bit declining on the profit side, declining profits are still very healthy. So it's really linear that's paying our business at this point in time. However, they do have clear focus on operating margins, and that's where they're putting their money into. So we're seeing the prioritization in digital technology that makes up the backbone of new media services, including cloud computing, software offerings often providing the top cloud platforms. Media companies are telling us that these areas they're investing in due to the future potential of these technologies, while they are comparatively reducing investment in traditional technology areas that power the linear outputs. If we look at the cloud, we can see the demand for technology accelerated significantly, and the results of the effective pandemic, with 52% of media business adopting the technology, which was up from 36% pre-pandemic. Cloud and virtualization has also become the most important priority of MediaTek roadmaps, followed by OTT and streaming platforms, as well as IP transport and networking. Roadmaps are related to technology development, and I wanted to show some figures here. The disconnect between technology demand and supply we're seeing in the industry. Although R&D investment by suppliers has declined slightly, it's still super high. It's over 30% of revenues, which is amazing. More importantly, insourcing investment at media businesses has grown in 2021 to 2022, driven by the need for control, customization, as well as integration. This could be considered as an efficiency on both sides of the industry. So let's come back to cloud and its impact in the MediaTek business models. Demand for cloud has continued to push the transition to SaaS models in MediaTek. Avid subscription segment has surpassed the integrated solutions segment in 2022, which accounts for 35% of its total net revenues. Harmonic has also continued to report significant growth in SaaS revenues. This is this is very consistent rather with our data, which shows software subscriptions are the fastest growing revenue category for suppliers post-pandemic, followed by on-demand revenue, which however slows up possibly due to the normalization of spending. It is interesting to see that hardware revenues have bounced back significantly from the decline in 2020, which may have been correlated to the increasing in pricing due to the supply chain disruptions. This chart shows the content supply chain investment due to pandemic and post-pandemic. The column shows slow change in investment, while the dotted line shows the overall investment in post-pandemic period. Between 2019 and 2020, investment in most segments has declined aside from the consume and the connect segment. Investment in consume as MediaTek businesses have continued to invest, of course, in OTT platforms. Connect has experienced exceptional growth, and this is mainly due to the rushed move of remote production models that required MediaTek businesses to invest quickly in conductivity solutions. Most segments recovered between 2021 and 2022. So let's have a look at some specific segments and some interesting trends. You can see on the create and the produce side, they've bounced back due to the production restart, and that remote production remains the top investment category in these segments. You can also see that monetize surpassed consume as the fastest growing segment, reflecting the increasing investment in AVOD models that I talked about before. Finally, it is interesting to note the investment in Connect is still growing, but at a slower rate. Investment in support is increasingly significant as MediaTek businesses are increasing investment in managing the complexity and decentralized operating models through monitoring and security solutions, for example. We could do a whole session on security, but I do hope everybody really focuses on security. So to conclude, I wanted to share this movie reference of Back to the Future, which we've used to open our research report. A lot of trends we're seeing, such as inflation, remind us of the past, though it may be a fallacy that there are many reasons to believe the future will be different. No question, COVID-19 has reshaped the whole consumption and investment patterns irreversibly towards digital, as we've seen this in the presentation. So with that, I've enjoyed giving the presentation, and certainly if you want to have a look, you can go on our website or use the QR code. You will have to register. That's just so we can keep track of who's looking at what and to see what reports to work on. So do that, and if we have any questions here, certainly you can do that. How about you, Bruce? You have a question?
What's the meaning of life, Stan?
What's the meaning of life? That's good. All right, well, we'll take some other questions then, Bruce. Thanks very much.
I think yesterday there was a really good question about
right.
defining the cloud.
Oh, right. So we've had a question about how do we talk about the cloud and how do we redefine the cloud in that. So let me just bring up a slide here on that and how we work on that. So if I look at our technology and trends roadmap, our current rendition just talks about cloud, and we do break it up into create, produce, manage, publish, and monetize. And what we do is we put everything on the technology roadmap on the technology adoption curve, which is bleeding edge, early adopter, mature, and commodity. So you can see certainly things like play out, which is published. You know, it's pretty well, you know, commodity at this point. There are some early adopters in some live areas with lower latency. You know, monetize in the cloud is very well known, and how that works on that. But really, when we look at the next generation of this, it really, cloud is just part of delivery. It'll become cloud storage, edge computing, and cloud storage will go into the storage and compute category. A lot of cloud activity is doing AI and ML analytics. So again, that'll mainly focus out of cloud just into those types of process. So you have to say, what does this have to do with immersive imaging? How do you get imaging out of cloud? Well, we're going to see more as we see more AR and VR activity. Do we do that edge computing? Do we do it in the visor? How does that work? So we're going to see some of that was working in the cloud more and more moving into how we work with that with immersive energy. So that's mainly the focus. Cloud, from my point of view, is just moving into all the other areas and becoming part of the business practice.
So I know you mentioned this yesterday. How do I get access to the report?
Well, if you want access to the report, we've got a QR code here, or you can just go on our website. You've got my business card, so you can shoot me an email and I'll make sure you have that full report. Great. Thank you very much.